Hello everyone, I'm Corey Mitchell with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of July 29th. Each week I go through the same process, just deciding how aggressively I'm going to be deploying capital, either to the long or short side. Heading into this week, conditions are mixed. We have a couple things that are concerning, but other health indicators that are fine. So this means I will deploy some capital. We'll talk about the one that is concerning and how that works, because there's a couple of rules I follow with that one. But that means at this point going into this week, I can deploy some capital, and I'll deploy more aggressively if I see opportunities I like, and if those troubling spots improve. And if things deteriorate, then I'll back off. So the current or at least you can check out some of the current watch lists here. If you're wondering where this article is, if you're watching this on YouTube, you can go to TradeThatSwing.com stocks, and if you go under stock market analysis and trades, you'll see this swing trading stock market outlook for this week, updated each week. So let's check out the indices. We have the NASDAQ had a little bit bigger of a tumble. NYSE Composite, very broad measure of stocks, includes big companies, small companies, stocks from all different industries. S&P, a little bit bigger decline, and the Russell 2000 holding up well. We also have the Canadian index holding up well. So we have a couple indices that took out prior swing lows here, the NASDAQ and the S&P 500. Looking at kind of the overall declines, these are pretty common declines. They're not huge. We've seen these kind of declines before in this bull market, in this overall bull market, so it's not majorly concerning, especially since we have these other indices holding up well. But yeah, it's not ideal when we take out lower swing low. That's more of downtrending type behavior. But if we start building back to the upside and the health indicators are good, I'm willing to take longs. So this is, just not an immediate reason why I wouldn't trade, but it is, something to be concerned about. So we allocate capital accordingly. If everything's just humming along and everything looks really good, then I'm more aggressive with deploying capital. When things are not ideal, I deploy less capital. Simple as that. Bitcoin, I still like the overall look of. We'd been in this range. We took out those lows, flushed it out. All those, what we call like the weak hands, looking at this prior low, probably got out, and now we've had a nice strong rally. So this is looking really good to me, but we still have to break above this range in order to have the next leg up. But I did like it. Had been long for a long time, sold some at the old high, sold some here, and then bought back in after this false break, and we started going up. So we discussed that a week or two ago. Let's look at the market health indicators. This is just the S&P. These look a little bit more under the hood of what's going on. Volume, not important to me at the moment. This one was concerning. So anytime, first I should explain, bull markets are characterized by lower volatility. Bear markets characterized by higher volatility. One of the big things you can look for is, what do the down days look like? This indicator is simply a rate of change, a one-day rate of change indicator, which just tells us the percentage price movement of the S&P 500 on a given day. When you have more than a 2% drop, that is more characteristic of downtrending bear markets. So I have a rule where I must step aside for at least a couple days. We've had a couple days now. We didn't really continue lower. Tiny bit lower on, we got the 2% down day on Wednesday. I think it was the 24th. Then the 25th, we went a little bit lower, and then we rebounded slightly. So this gets nullified once we start moving back up and we basically clear that big drop level. So we had this big drop here. Once the price starts moving up, if it gets back into this area here, then that at least tells us, okay, we had a big sell-off there, but the price recovered very quickly. Still, we can keep it in the back of our mind that happened. Again, it's not ideal. So when something like this happens, I wouldn't just be, plowing all my money long. I would spread it out. If I see, a setup or two I like now, maybe I take those, leave some capital in the account. If things get better over the next few days, then I see some other setups I like, then maybe I take them then. But it's more of a progressive allocation as the market confirms what I'm doing, which is buying. And if this starts turning lower again, then we only have a little bit of capital out there. We can consider taking it off, and we don't add any new positions. This is looking really good though. So this is the advanced decline line. Advancing stocks minus declining stocks is a cumulative number, and you can see it's almost near its highs again, while the S&P has pulled back. So it's actually moved up recently. Had a little bit of a pullback, but it's hanging out right near these prior highs. So that's good. That's a positive divergence, indicates a little bit of underlying strength. This is up volume divided by total volume. We're only looking for extreme values. There hasn't been any, so that's just neutral face, neutral. It's in neutral right now. It's not telling us anything. This is how many stocks are above their 50-day moving average. So the red is the S&P 500, and the turquoise bluish is all U.S. stocks, and you can see pretty much 69-70% of S&P and all U.S. stocks are above their 50-day moving average. Just a very crude measure of stocks in uptrends. So that's good. I mean, most stocks, at least according to this indicator, above their 50-day, holding up okay. So even though we had a little bit of a drop in the indices, most stocks looking okay. Sectors on the move. See if I can fit that all in there. Utilities I don't really care about. As I mentioned here, they're usually lower moving stocks, so they've been really strong this year actually. But healthcare, financials, real estate, those are the ones that are doing pretty good. Technology, of course, we look at the NASDAQ, beaten down a little bit recently, but I would still keep them on the radar simply because they tend to be one of the bigger moving sectors generally, and they're the top performer over the last 3 months, even though they've been smoked a little bit on the shorter time frames. So those are the ones I would look at. There's always little pockets you can look at. So these are the sectors. You can dig deeper into those. You could click on a sector on FinViz, dig into which specific little industries are doing well. Sometimes you can find pockets that are performing well, even when the stock market overall might not look so good, or it's kind of in mixed conditions like it is right now. You can find these pockets that are doing really well. So I am considering some long trades, calibrating based on the uncertainty of conditions as discussed. I still like Bitcoin based on the bigger technical picture there and the recent false breakout. It's moving higher. Ultimately, it does need to continue moving higher. I also day trade stocks in the Euro USD. If you're interested in that, you can click on these links here. So hopefully you have a great week out there, and happy trading.